Right, we'll go ahead and get started. Welcome everyone to today's RGP webinar, Next Gen Finance, Thriving at the Intersection of Technology, Talent, and Transformation. I'm Eleanor Rednick, and I will be moderating this session. Our conversation couldn't be more timely. In RGP's June 2025 CFO Perspectives report, which featured over 200 senior finance leader perspectives, 69% report feeling positive about their organization's current financial health, and 60% are optimistic about the next year. Yet, CFOs also face these big inflection points. 84% express optimism about AI's impact, but only 27% fully trust their enterprise data. And 70% say their influence on enterprise-wide decisions has increased over the last 2 years. These insights set the stage for today's discussion about how finance leaders are balancing bold innovation with disciplined risk management in a time where we see constant change. We are offering one NASBA CPE credit for participation. To earn that credit, you'll need to stay for the duration of the session and respond to at least 3 polling questions. With that, let's dive in. I'm pleased to hand it over to Andy Jones, VP and Head of Global Finance and Accounting at RGP. Andy, take
Thanks,
it away.
Ellen. Thank you, Ellen. Greetings all. Good day to each of you across the multiple time zones we have represented. Glad to see everyone here. Before I dive into today's topics, I wanted to take a moment to introduce my company, RGP, and myself just for a moment. We're about to celebrate our 30th year of providing people-centric professional services and consulting solutions for clients around the globe. Over this time, we've completed hundreds of thousands of projects for clients large and small. We serve 88% of the Fortune 100 and 70% of the Fortune 500. With more than 2,600 consultants, we deliver a broad range of solutions around the world in a broad array of functional areas, including technology, digital transformation, ERP migration, data, risk assurance, supply chain management, program and project management. I could go on, but I don't want to forget about my area, which is finance and accounting. I've been with RGP almost 9 years and have had the pleasure of leading a global group of finance and accounting consultants who are passionate about helping clients implement transformational change within the finance and accounting function and adjacent areas. We help clients modernize their accounting through process re-engineering and technology enablement. And it's those 2 areas, along with general business strategy, that have been central to my career over nearly 40 years across a variety of industries. That's enough about me, though. Let's look at the topics that we're going to hit today over the course of the next hour. As you see here on the slide, we'll be talking about the forces that are redefining finance and accounting today. We're going to talk a little bit about workforce and talent evolution, the evolving role of the CFO. Then we'll dive into technology and the AI learning curve. We're going to talk a little bit about the secret to successful transformation, some tips to implement AI. And then I want to leave you with one thing. If you're going to take away one thing from the session itself, we're going to try to leave you with something that you can use going forward. So with that, finance is under pressure like never before. Maybe you feel it yourself, more demands, more complexity, and the pace keeps accelerating. I think these forces were inevitable, but I noticed a shift and an acceleration in the early days of the 2020 pandemic. Investors wanted to understand the impact of factory and office shutdowns and what kind of impact they'd have on businesses. F&A teams ran analysis after analysis, attempting to predict the impact of various scenarios. Supply chains were disrupted, not only at a macro level, but also in really nuanced ways. I remember an NPR feature that explained how dairy farms were forced to dump milk in the early stages of the pandemic due to specialized distribution systems that were designed for institutions like colleges and hotels, which had been shut down. The distributors had used bulk packaging that was very specific to industrial use, and and it couldn't easily be switched to retail size containers, leaving farmers without a market and nowhere to send their milk while retail packagers were at full capacity. Uh, this and other examples of products and services that had to be reconfigured to meet the demands created by a restructuring essentially of an economy over the course of a year really changed the way we acted. And I think those impacts were felt by everyone. They were felt by consumers, by suppliers, by supply chain planners, pretty much every function. But I think no one felt the pressure like analysts in the FP&A function. And while the consequences of the pandemic were ultimately mitigated, the thirst for rapid insights didn't diminish significantly since then. Boards, investors, CEOs, business unit leaders, and the like all now look to the office of the CFO for guidance on how organizations' strategies are playing out, where they need to invest, where they need to cut back. These rising expectations placed upon the office of the CFO are just four of the forces we'll examine today. We'll also look at three other forces reshaping finance, including automation, AI, and workforce shifts. So as we kick off this section of the discussion, I'd like for you yourself to reflect upon the forces and ask, which of these feels most pressing in your world? And with that, I'm going to serve up our first polling question. And again, if you're requesting CPE credit from this event, remember that you'll need to answer at least three of the four polling questions presented, and you'll need to attend the session in its entirety. So the first question is, what area is your finance team struggling with the most today? Is it talent gaps, technology adoption, process inefficiency, or strategic influence? I'll give you a few seconds to consider these and respond accordingly. Ellen, if you'll let me know when polling closes.
I will. I'm monitoring. We've got about 75% in. We'll leave it open just another moment for anyone who still needs to respond. All right, looks like our responses are in, and I'm sharing them now.
Oh, good. All right. Well, it looks like process inefficiency and technology adoption are the highest response, and then followed by talent gaps and strategic influence. The process inefficiency issue is certainly one that a lot of companies wrestle with, and it's certainly a topic that we're going to talk about as far as setting a foundation for the future. So stay tuned. Let's talk first about a little bit about what's going on within the accounting workforce. When I assumed this role 6 years ago, headcount containment was a huge factor for virtually every CFO I talked to. Most were looking to reduce headcount. Many were planning some pretty significant cuts. This mindset seems to be changing. Mind you, productivity is still important. Driving down the cost of delivering F&A services to the organization still continues to be a priority. But with some of the demographic changes that we're experiencing, the emphasis on reduction is lessened. The demographic changes that we're seeing in the US and abroad have put a new spin on things. As you can see from the data on this slide, there's been a gradual decline in available F&A talent over the last several years. Fewer are graduating with degrees in accounting. There's been a 3% drop in bachelor's degrees and 8% drop in master's degrees over this time, year over year. Fewer people are even taking the CPA exam. The number of CPA test takers peaked back in 2016 at around 100,000 test takers. I did see recently a promising article, albeit without a proper citation, that said that there's a trend upward that we can expect over the course of the next year or two. So I'm excited to see that. That said, we've seen mass exodus of people leaving the field altogether. More than 300,000 people left the accounting field in 2021 and 2022 alone. A lot of that was brought about by the pandemic, which hit F&A particularly hard, but some of it had to do with macro issues. Think about it. The average age of CPAs is about 52 and a half years old. Baby boomers are retiring at record rates. Gen Xers like me are also retiring. So we have fewer people coming into the profession, and we have a lot of people leaving the profession. This is setting up a real problem. Finance leaders talk today more about how can they attract new talent and how can they retain their key employees, much more so than they had in years past. There are myriad ways in which we're dealing with these issues, including addressing our operating models, the technologies we deploy, and the talent models we leverage. We're going to talk about each of those today. I guess the good news is that the people that are entering the workforce and have entered over the course of, say, the last 10 years are digital natives. They've been surrounded by technology their whole lives. They can't imagine a world without cell phones. But they have an expectation that employers will provide the necessary tools to get their jobs done efficiently and effectively. That puts the onus on us as leaders to show them the vision of what we need and to give them the tools that they need in order to turn that vision into reality. Finance teams are facing another talent gap. Look at the statistic at the bottom left. 75% of the leaders report that their teams are stretched beyond sustainable capacity, and they're having a lot of difficulty fulfilling roles. It's not just that there are fewer accounting professionals in the market, but today's demands create a different skill set demand altogether. According to the Financial Services Skills Commission's Future Skills Report, that's a mouthful, the demand for professionals with AI, ML, data analytics, financial modeling, and strategic skills is more than twice the supply. That's right. The demand is 2x the supply of the talent. While this study primarily examined demand in financial services industry, that industry is a bellwether for other markets. Skills that were outliers 5 years ago are pretty much table stakes now. I think the one adage I've heard most this year is AI might not take your job, but a person who knows how to use AI probably will. As I mentioned a moment ago, the skills required in finance are evolving dramatically. Beyond technical accounting knowledge, today's finance and accounting professionals need data and analytics capabilities, technology aptitude, process improvement expertise, and strong business acumen. A recent industry study found that 78% of CFOs cite skill gaps as their largest obstacle for transformation. In addition to AI specialists, new roles emerging within finance include data scientists for, say, predictive modeling, automation architects who design intelligent automation solutions, transformation specialists who lead continuous improvement efforts, and business analytics partners who can translate financial insights for operational leaders. Leading organizations are addressing this challenge in a variety of ways. Some have begun targeted hiring in these areas, while others are investing in their existing teams through upskilling. I've seen a number of organizations creating digital finance academies that provide structured learning paths for existing finance team members to match the needs of the future, to meet the needs of the future. Still, others are using third parties to inject these talents on an ad hoc or on a project basis. The rise of remote and hybrid work models added yet another dimension to the operating model design. Finance teams must balance the benefits of flexibility with the need for collaboration and control. Successful models typically involve core in-office days for collaboration, digital collaboration tools for virtual teamwork, and structured knowledge sharing to prevent information silos. Another word on the composition of the workforce. Our workforce is now not only a blend of traditional employees, gig workers, and consultants, but we also now have a realm of digital workers, whether they're RPA bots or AI agents who assist and ultimately perform much of the work done in the finance org. And that component of the workforce will continue to grow. More on that in a little bit. So let's revisit the concept I mentioned a moment ago, the need for nimble problem solvers and other relatively unique skills. The reality is finance teams are no longer static. Today, success requires flexibility, mixing core employees with on-demand experts and partners. In the world of finance and accounting, this model gives rise or this model gives CFOs agility, the right talent with the right skills at the right time. I'm going to take a drink of water and let y'all do another polling question. It's time for polling question number 2. And again, as a reminder, you'll need to answer 3 of these for CPE. What's your biggest talent challenge that you're facing today? Would love to hear from each of you.
Responses are coming in quickly, about 50%.
Okay, excellent. Eager to see what people say.
Right, we'll give it just another moment. Looks like we have the responses in. We will go ahead and end the poll and share those results.
Okay, it looks like number 1 was finding specialized skills such as AI, analytics, digital finance, followed closely by retaining experienced staff and aligning talent to evolving CFO expectations. That's not shocking to me at all. We already talked about the skill deficits. And I am just seeing in a lot of organizations, seeing a lot of organizations struggle with how they retain employees. This, the new generations of employees job hop quite a bit. And if we can't deliver for them what they expect out of a job, they're going to go somewhere where they can, contribute more. Let's take a couple of minutes here to talk about the ever-evolving role of the CFO, because I think that's pretty important to setting the stage for the future. The role of the CFO continues to evolve. Organizations' demand for digital transformation is hastening that evolution. Our own research here at RGP showed that 93% of CFOs have significant sway over their organization strategy, and about 74% have enterprise-wide influence. CFOs aren't just responsible for financial reporting and compliance, of course. Now the Office of the CFO is a full business partner with business leadership. They help the board, the CEO, business unit heads, functional leaders, and the like blend operational data, financial data, and other third-party data to gain insight into what's driving the business. They're strategic advisors, they're transformation leaders, and they're drivers of growth, all while their foundation is under strain, like we talked about with the challenges that they're facing. And keep in mind, when I refer to transformation, I'm not just talking about finance transformation. I'm talking about enterprise-wide digital transformation. Research shows that in more than 2/3 of organizations, the CFO is in charge of digital transformation for the entire enterprise. So many of you have probably heard about Finance 4.0. It's not a new term. It's been around for about 10 years, maybe even more. Finance 4.0 is about how we utilize digital technologies to drastically change the work that we do and how we do it. As I mentioned a moment ago, this will usher in a blended workforce, one where humans, software bots, AI agents, and the like all share the work to drive specific outcomes. Look at the table here, comparing prior iteration of the finance function and the CFO's responsibilities today. As we mentioned, CFOs are certainly at the forefront of technology decisions, collaborating with the CIO, the CEO, and other leaders to ensure that tech investments are prudent and enable the company's strategic vision. The Office of the CFO also plays a role in functional areas such as operations and supply chain to avoid risk, and even to potentially use supply chain as, say, a competitive advantage. Finally, I'll point out that CFOs are key enablers to growth. They use data and insight to make investments, to borrow from the old hockey adage, going where the puck is going to be, not where it is today. The new priorities for the Office of the CFO have a common theme: uncovering and leveraging business insights. Stakeholders across the organization look to the Office of the CFO for insights that blend financial, operational, and third-party data. We've been going through a period of macroeconomic uncertainty. CFOs have to spot emerging trends and anticipate their impact on the organization, their clients, and their suppliers. What's the impact of, say, tariffs or interest rate fluctuations on supplier demand, on the supply chain? How can we build in more resilience? How can we, how will innovation drive the composition of our sales? How can a new market entrant impact us? How might we, how might that entrant affect our pricing strategy? What other market disruptions can we expect? What steps can we take now to prepare for the possibility? What if trade tensions, cyber attacks, or other factors impact our market altogether? Stakeholders expect that a digitally empowered Office of the CFO will be able to answer these questions and more. So, polling question number 3. Where do you see the biggest opportunity for CFOs to drive impact in the next 3 to 5 years? Is it leading enterprise-wide strategy and growth, accelerating digital transformation and AI adoption, building high-performing agile finance teams, or driving data-informed decision-making across the organization? We'll give it a few more seconds. If you haven't responded, please do so, especially if you're looking to get CPE credit, but we're eager to hear from you regardless.
Looks like most responses are in. We'll give it just another moment for any last responses. And we'll go ahead and end the poll and share those results.
Okay, it looks like the second and third came in a pretty close tie, an exact tie. Accelerating digital transformation and AI adoption, as well as driving data-informed decision-making across the organization. So pretty interesting results there. I expected the first one to have more, and it turned out to be the bottom. So we've got an interesting group with us today. So let's dive in a little bit deeper and talk about the technology that is enabling or will enable Finance 4.0. From spreadsheets to automation to AI, finance has never stopped investing in technology to keep up with rising demand. Each wave brought real gains like faster close cycles, fewer manual errors, more capacity for analysis. I think I was in 9th grade when I first saw VisiCalc, an electronic spreadsheet that paved the way for Lotus 1-2-3 and ultimately Excel. I couldn't believe how amazing it was that an electronic spreadsheet could replace and displace paper ledgers altogether. 45 years later, we still love our Excel. It's perhaps the greatest application ever made. But I have to say, I've spent a lot of my time these days trying to help clients go beyond Excel, automating work, instead of spending valuable time doing pivot tables and VLOOKUPs and the like. The proliferation of distributed computing created lots of roles with repetitive rules-based tasks within finance and accounting. In the early 2000s, banks and insurance companies, who often lead the way in breakthroughs, grappled with how to offload these tasks. That industry still had legacy mainframes and AS400-based servers combined with hundreds of thousands of PCs, an application stack that straddled across generations. Some organizations look to offshoring or business process outsourcing to introduce, to solve some of these problems and offload these problems, but doing so can introduce risks and challenges. This gave rise to robotic process automation, or RPA, which enables business and tech users to leverage software robots, digital workers, if you will, to perform these tasks and these repetitive rules-based processes. By the 2010s, RPA had become mainstream, freeing up human capacity, not only in finance and accounting, but virtually across every function. 5 years ago, we helped an organization, one of our clients, build their first few automations to support transformation within their accounting operations. We automated a bunch of work in accounting, and the other functions caught on. They've now expanded their use to 10 plus functional areas with dozens of automations across the enterprise, saving them hundreds of thousands of dollars each year. In the late 2010s and 2020s, organizations started incorporating machine learning into RPA automations. Doing so, using machine learning and RPA, we can avoid human in the loop step outs, at least partially, and especially in low risk scenarios. This gave rise to mainstream intelligent automation. Around the same time, AI and ML started to creep into other platforms. Of course, financial services led the way by building machine learning and artificial intelligence into their tech stacks to help streamline operations such as loan and credit reviews, and to help prevent fraud and cybercrime. We started seeing machine learning make its way into mainstream applications and even ERP thereafter. Give you an example, FP&A platforms have now introduced predictive modeling into their applications, and native AI AP automation platforms are now running circles around, say, the old template-based OCR solutions. Generative AI exploded with the wide release of OpenAI's ChatGPT and their GPT 3.5 model in November 2022. Suddenly, people that never gave a thought to artificial intelligence, other than maybe in the movies, had an intelligent chatbot at their disposal. Within 5 days, OpenAI had over 1 million users. Now we're almost 3 years later, and generative AI tools have somewhere in the neighborhood of 150 million daily users. And about 89% now of the global population, that's 7.3 billion people, have a smartphone that can give them access to free AI. Think about that. 25% of the world's population doesn't have easy access to clean drinking water, but 9 out of 10 humans have access to AI. These generative AI models have APIs that can be used to extend the benefits of many applications. While AI and ML are driving success for some firms, the use cases within F&A have been somewhat pedestrian in my mind. A lot of the AI features I'm seeing are really just natural language add-ons that allow users to ask questions about their data, making it a little bit easier to run reports or maybe seeing dashboards or outliers and the like. The big question most people ask me is, how do I apply AI and machine learning? How do I use it? With each step forward, the bar of expectations is raised higher. Efficiency alone isn't enough. Technology alone isn't enough. Technology won't remove your bottlenecks, nor will it fill talent gaps. There's certainly work for us all to do here. Despite the availability of AI and its promise and power, investment in AI is still lagging in finance and accounting. At the end of 2024, Bain Capital Ventures surveyed 50 CFOs across growth stage and public companies to understand their investments in generative AI. Nearly half of these firms had invested less than $100,000, and only 18% had invested more than $500,000. Now, that's only 50 data points, so we don't have full representation of the market, but I think the data is directionally correct and in line with what I'm seeing out there. Not many companies have invested heavily in AI, not quite yet anyway. Now in 2025, 79% of respondents to this survey said that their AI budget will indeed increase. But this is critical path. Keep this in mind. You can't catch up later. If you haven't been investing time to understand your people, your workflows, and how to deploy AI effectively, you're already starting to fall behind. It's okay with me if you're not investing heavily or directly in new AI in 2025. But what I will say is you should be investing time and energy in getting ready for AI. And I'll talk to you about laying that foundation in a moment. because I think without that foundation, it's going to be really difficult for you to achieve AI enabled outcomes and to succeed in the market. In that same survey I talked about on the last slide, CFOs were asked if they were currently using AI in the F&A function. 71% said they weren't using AI at all in F&A. I suspect that's underrepresented, and I'll explain why in a moment, but when we talk a little bit more about embedded AI, as many may be getting a taste of AI without actual direct spend or even knowledge that they're using artificial intelligence. 94% of the survey's respondents said that generative AI can strongly benefit at least one activity within their organization, within their finance organization, within the next 12 months. And 63% indicate that it can strongly benefit 3 or more finance organization activities within the coming year. So that's, sorry, I advanced too quickly. With all that power, AI adoption still low. Business leaders don't necessarily see the full potential. And I think some of that is because of trust. I think some of that is because of readiness. And I think sometimes other organizational priorities are holding them back. Interestingly, there was a study out of MIT that came out a couple of months ago that showed something like 30 to 40 billion dollars of enterprise spend has been invested in AI, but only about 5% of those AI investments are truly paying off with measurable P&L impact. Why is that? Well, first, I think we have to take it with a grain of salt, so to speak. The study was based upon a relatively small sample size, so it's not a comprehensive study. But I think that there are some nuggets to guide us here. Many organizations tried to jump on AI without a strategy at all. The lack of upfront clarity on the desired outcomes, the lack of a defined strategy, that's not a good recipe for a positive ROI. Another potential cause, general tools such as Copilot and ChatGPT may improve some individuals' productivity, but those individual gains aren't really translating into enterprise level outcomes, primarily because they lack integration into enterprise-wide workflows. People might use Gen AI to address certain tasks, but they're not building these into enterprise workflows to drive scale across the organization. Enterprise-grade systems are stalling in pilots as well, with only about 5% making it into full production. Pilots sometimes lose their way, I think, because objectives and desired outcomes were poorly defined. Again, it all comes back to those expectations at the beginning. They just got off track. According to the study, only the technology industry and media sectors have really seen structural change due to AI disruption. I think ultimately AI implementation will hinge upon embracing agentic AI systems that retain context, that improve over time, that favor external partnerships over internal development, and prioritize some back office automation for even higher ROI. Performance happens at the intersection of people and technology. People provide context, they provide judgment, and they're adaptable. Tech provides the speed and the scale. Together, they amplify and fuel transformation. Okay, there's a lot on this slide. I'm going to try to walk you through it. When clients come to me and start to talk about AI, I find this slide actually pretty helpful to discuss what kind of different flavors there are of AI, if you will, ways that AI and ML can be used to assist us in our work. Too often, I think that people think of AI as just chatbots. As you can see here, these technologies play a wide range of roles, from automation and simulation through vision, interpretation, and creation. I'll walk you through a few of those now. As I walk through, I'd like for each of you to think through which of these capabilities will benefit you and your organization the most. I think that's key here, is to form hypothesis about how you can use AI. It's a good first step. Think about the use cases and how these roles or abilities will help you improve upon your current situation. So let's look at intelligent automation. I mentioned it a little while ago. That could be things like simple email triage or account reconciliations, taking things beyond the templated OCR for invoice processing, automated reporting, data blending, and the like. Or you could look at simulation. Um, we talked earlier about this a little bit, simulating profitability or the tax impacts of market scenarios and behavior. Fraud detection, supply chain resiliency would fall into this category as well. You can simulate the impact of different scenarios upon your supply chain. Interaction. Lots of emphasis has been placed on interaction over the last 3 years since ChatGPT hit the street. By interaction, we generally mean natural language queries of data sources and modeling scenarios, or automated notifications and alerts for, say, compliance, payment status, inquiries, self-service routines, and the like. Of course, generative AI models like ChatGPT do a lot more than just facilitate interaction. They're also gateways to some of the other capabilities that you see here on the screen. Prediction, another facet, another role that AI can play. Forecasting, whether it's revenue, cash flow, supply and demand, whether it's detecting fraud, trying to prevent fraud, credit risk assessments, predicting lifetime customer value, for example. Computer vision is something that a lot of people are appealed by the characteristics of AI. Intelligent document processing is a classic example for reading invoices, contracts, even bank statements. I've seen where computer vision is now being used to do physical inventories and asset tracking. And again, back to fraud detection and prevention, and other security measures. And then finally, interpretation and creation, things like automated variance analysis, MD&A reporting in finance, bespoke invoicing, or complex scenario forecasting. So what are the different forms that AI comes in, and how do we come by these? I think the really good news for F&A professionals is that a lot of your F&A is going to come from platforms you already have in place or platforms you're looking at in the not too distant future. These with embedded AI capability. You won't have to wait around for your IT to figure out how to build AI models and collect the data, train the systems and the like. You'll get it as part of your quarterly updates to your ERP or your application stack. Oh, forgive me. Sorry, I hit the fast forward button there. Let me come back to this. So Gartner expects by 2026 that 80% of independent software vendors will embed some sort of AI into their applications. 80% is a significant chunk there. In fact, embedded AI is the largest and fastest growing segment of AI capability, according to that same Gartner study from last year. These AI features will come in the form of upgrades and add-ons, as I mentioned, to existing applications, whether it's your ERP, your CRM, your FP&A systems, or EPM solutions. Oracle and SAP have already released a number of AI-powered improvements. I was just at the Blackline conference. They've begun integrating AI throughout their product suite. And there are so many other examples that are out there today and are going to be released in the near future. With today's range of AI options, many businesses want specialized AI solutions for their business needs. For example, your marketing team may want to implement Gen AI software for content creation, or legal may ask for AI software to help write contracts. Unlike embedded AI, which comes from applications already built by others, bring your own AI essentially comprises models and algorithms that are built in-house. Building AI in-house can provide competitive advantage, enabling you to create new products and provide business agility, but only if they're done correctly, and it's not easy. Individual bring your own AI solutions aren't by definition a problem, but you need to know what you're doing. You need to be clear about your objectives, the approach you take, and the reasons why you're building in-house. If you fail to do these, in-house projects could be part of the 95% of AI investments that currently fail, according to that MIT study I mentioned a moment ago. Bring your own AI can also result in AI overlap, unnecessary costs, and more technical debt. As firms perfect their use of the technology, we'll start to see specialized models, I think, for AI agents in finance and accounting, as well as orchestration of agentic AI. In the short term, however, I think those will be the exception, not the rule. The fact is, there have been many specialized applications in F&A using AI for years. As I mentioned, the banking and financial industry has used AI, both blended, embedded, and bring your own AI for fraud protection and prevention for years. They used ML and AI for processing loan applications. Some of these were built in-house. Some were applications created for a particular market or a use case. And that brings up the interesting middle ground, and that's blended AI. Blended AI is enterprise crafted AI that can be either built or blended with a centralized, centrally owned AI capability under the purview of your in-house software engineering, but also leveraging outside models. They leverage existing models, which can help you, overcome the difficulty in building and fine-tuning models and the expense therein. It's not cheap to build your own AI model for something at enterprise scale. With blended AI, how organizations, they can use AI APIs from AI models, from the foundation models that you see in, say, ChatGPT, Claude, Anthropic, and the like, and build custom front ends, build integrations with your existing platforms and processes. You can use your own proprietary training data and whatever other customization that you need in order to make the models functional for the organization. With a few exceptions, I think most of the AI that you'll be using in F&A will be either embedded AI or blended AI. So let's talk about that foundation I mentioned. If you're not investing heavily in AI right now, there's still steps you should be taking to prepare yourself and your organization for AI. My advice is to take the time right now to start building that foundation. You'll need governance. You'll need a comprehensive system that balances innovation and responsibility, a framework that addresses the processes, standards, and guardrails that help ensure that the AI systems and tools that you use and build are safe and ethical. You're going to want to address critical risks, including AI transparency, privacy, security vulnerability, and environmental sustainability. Our risk assurance team can help you if you need to get the right frameworks in place for sure. As part of this foundation, you're going to need clean, reliable, and accessible data. You're going to want to establish good data governance, ensuring that business users are aligned on your data, how it's defined, and how it's going to be used. Accessibility is key for speed. If you're going to build a data lakehouse, if you build a data lakehouse today with good data in it, it'll be far easier for you to connect your AI models in the future, regardless of where they come from. And then having to build connectors as each of those models is defined. That'll also cut down on your technical debt. And coming back to data cleanliness, it doesn't have to be 100% complete or 100% perfect, but you need to know that if your data isn't reliable, your models may not work as you want them to. Worst case, they could steer you in the wrong direction or introduce unintended bias. You're also going to want to examine your processes, and a lot of you spoke about having process difficulty today. If you haven't had an outside look at your processes, I encourage you to have a third party take an unbiased look. When you're looking to automate or introduce AI into a process, don't just pave the cow path and replicate the current process. Instead, work backward. Think about the desired outcome you're trying to achieve, and then figure out the simplest way to get the results. Can an automation or AI help you acquire the information you need? Great. Could it perform reliable calculations and transformations? That's fantastic. Invest in streamlining your process. Make sure that each step is working toward that desired outcome. It's amazing to me how many times we do process assessments for organizations and run across steps that nobody in the organization understands why a given step is even taken. It was created years ago. Firms are taking valuable time to prepare and massage data and create reports that sometimes no one is using or even looking at them. Invest in skills too. When you're hiring, and we mentioned that there are shortages of AI personnel, you're going to want to think through, are these people capable of, do they already bring AI skills? Could they learn them? Look for people with digital comfort and experience. Invest in your people. Encourage and reward them for taking AI related courses. Get them involved in identifying use cases for AI and allow them to be part of well-defined pilots. Encourage supervised and monitored experimentation. Look to third parties to help inject AI skills. Establish AI related KPIs that are tied to corporate goals, and then measure and monitor collective and individual performance. You want to build and nurture a culture where people both trust the systems and they trust the numbers. Without this, AI is like building on sand. It'll fail. With a solid foundation, however, you can drive toward your intended outcomes, gaining confidence in your AI assisted decision making. You'll get work done faster, you'll identify risks sooner, and you'll drive insight across the business. While you're building your foundational elements, you need to think through some use cases. What are the biggest problems that you're facing where technology such as AI could help? Will AI bring you efficiency gains? Or maybe it'll help you extend your existing automations? Will it help you enable process automation where traditional automation techniques just didn't work? Will they help bring predictive insights, helping you get, say, better forecasts and the like? Or maybe they'll accelerate internal processing time or your response time to your customers or other stakeholders. Similar to how I advise RPA clients, I say, look for where it moves the needle. Accelerate the close, compress your order to cash cycle, enable real-time scenario planning, deliver insights back to the business. If your automations and your AI use aren't doing one of those, you might want to channel your energies elsewhere. We're getting close to bringing things home. I wanted to give you a little bit of a glimpse of the world that I think is going to happen, how the world's going to evolve over the next couple of years. I think right now we're living in the time primarily of having AI tools that help us. They help us by enabling us to get information more easily, to ask questions of our data, to answer questions that we might have, and to craft inferences about the data that we use. These tools can help us spot patterns that we might not be able to pick up ourselves, or to catch anomalies or transactions faster than humans can do so with more traditional methods. AI agents, the digital workers that act on their own, will indeed bring on a new era of automation for some of these, just like an automation that you might have today where that would replicate what a junior accountant might do. It might log into a system, pull reports, make calculations, send follow-ups, and prepare a summary for review. An AI agent can be trained to do those steps automatically. It has goals. It can decide what to do next. It can learn from feedback. It's not just reacting. It's reacting with intent. It can understand the goals you set, say, reconcile these accounts, or it can break down steps into individual components like logging in, pulling data, comparing balances, making decisions as it goes along, asking for help if it gets stuck, and learning from past outcomes to get better. This is really different from traditional automation, which is traditionally rule-based and very rigid. Agentic AI is more flexible and proactive, like a smart team member who figures out how to get things done, even for a situation that it never encountered before. For those of you using RPA, you might have bots that you tell it, hey, every Friday, go to system A and run the trial balance and export it and email it to me. Now imagine telling an AI agent, keep an eye on accounts payable and tell me if anything looks unusual, like duplicate vendor payments or missed credits. An AI agent knows how to explore, use tools, and might even say, hey, I found 3 vendors that we paid twice this month. Should I draft a summary report for you? These AI agents are real. They're here today, and they're getting better and better exponentially fast. It's really exciting for users like us that use these tools and are starting to experiment with various platforms. I've been experimenting with an AI platform that completely abstracts much of the behind the scenes work, like connecting to data sources, normalizing the data, selecting which foundational model is best for your use case, and then preparing the results. The platform's been used by the US government for a while for some pretty heady stuff, including military planning and pandemic modeling. And while that might seem like a big leap, I expect that many organizations will be able to embrace platforms like that in the not too distant future. If you asked me a month ago when the majority of us would invest in AI agents or would be using AI agents within finance and accounting, I might have said, it'll still be a few years out. But I saw a TED talk the other day with Eric Schmidt from Google, former CEO of Google. He laid out a pretty compelling argument that the exponential growth of AI is going to compound even faster, and that the capability of these agents is going to bring them to the forefront even sooner than I anticipated. I think, within 4 to 5 years, maybe even sooner, these agents and systems will have the ability to essentially act relatively autonomous across the organization, across our enterprise platforms, and certainly within our finance and accounting functions. Internal audits will be performed continuously with a universe of company data rather than periodic sampling, and all of it will be touchless and autonomous. I've got one final closing polling question, and then I'll leave you with the one thing I want you to take away for today. What's your biggest barrier to leveraging AI effectively? Is it lack of skills? Is it data quality? Is it leadership buy-in? Or is it cost of implementation? I'd ask that each of you take a moment and provide a response. And of course, if you're looking for CPE, please make sure that you've responded to at least 3 of our polling questions.
We do see those responses coming in. Leave it open for another minute. After this, you'll see a final poll pop up, which will ask you to confirm whether you are requesting CPE credit today. Again, as Andy just mentioned, to receive CPE, you need to have answered 3 of our 4 polling questions. Looks like we've got our responses in. I will go ahead and end the poll and share these final results, Andy. Here you go.
So skills lack comes in the lead, not a surprise there. Data quality, that's something we can all start working on today. Cost of implementation, I think cost of implementation will come down and will come down dramatically. Obviously, we're going to get exposed to more tools. There's going to be more competition in the market. So I expect that kind of market pressure to drive down costs. Leadership buy-in, I'm glad to see that that's relatively low. So with that leadership buy-in, you should get the support you need to get those processes and data and skills embedded in your organization so that you can indeed take advantage of this next generation of tools. So I promised one key takeaway, and it's summarized here on this slide. Just because the number of AI pilots never, I think it was 95%, I said, or 90% of AI pilots don't see the light of day, and only 5% are producing material results now. Don't let that discourage you. The reason why they failed to produce meaningful results is the starting point. If you haven't understood your people, their roles, the gaps, their pain points, the technology won't deliver. Build that foundation. Otherwise, you'll just end up automating the wrong problem, or you'll get off to a bad start, and you'll set yourself back for years by embarking on the wrong path before you get it right. With that, I want to thank everyone for attending. I do think we have a couple of minutes for questions. I don't know that I can see the questions come in, but I might ask Ellen, if there are any questions that we can get to before we close out, if you'll let me know. And then what I will say is, if I don't get to answer all of your questions, I will review the chat afterward and get back to you individually or collectively, depending on how I'm guided.
Thank you so much for that fascinating session, Andy. Questions that we've received so far have mostly been around where can I get the deck and the slides? Will the recording be made available? So I'll just answer that for everyone. There
Sure.
will be a follow-up email for attendees that will include those materials. So yes, you'll get them all. We do have one question, Andy, that has come in the chat. Uh, Alex is wondering, what is the platform you mentioned that you and the US government have been using? Can you just remind
So
us?
yeah, I can address that a little bit. I had it in the original talk track, but I decided not to mention the company because I didn't want it to come off as an endorsement. But that platform is Palantir. I had the opportunity to get a sandbox environment in Palantir and experiment with it over the course of time. And I still have access to it. Unfortunately, the demands of the everyday job have not permitted me to jump back into the sandbox. But I can tell you that Palantir and other copycat type platforms are truly amazing. I could ingest data sets, normalize them, prepare the data, analyze the data, run it through a variety of models without any code, which I can code a little bit, but the platform didn't require me to use any specific coding, just essentially a little bit of threading together some workflows in almost like a drag and drop fashion. And I don't, while Palantir is a leader and they've been a stock market, you know, champion for the last 10 years or so, they're not alone out there. There are other platforms like Palantir that are emerging, and I think more will come over time. But really fascinating stuff.
And we do
Any other
have many,
questions? Oh,
we have many questions coming in, so I'll just say we won't be able to get to all of them, but we are capturing them to be included in follow-up. But there's one that I have to pull out for you, Andy, because I think it's just such a great question for your expertise.
oh.
How much does collaboration between cross-functional teams play a role as a foundation for AI in finance?
Well, I mean, I think collaboration is key to any business success, right? I've had in leading clients through transformation efforts over the course of the last several years, I've often encountered stakeholders who said, "Hey, I just want to keep this narrow in my functional area. Let's not make a big deal out of it." And that almost always, to me, um, causes problems in the long run. So I have to advise my clients, "Hey, let's bring different people in." I almost always advise, let's bring in the internal audit team because we want to make sure that they're comfortable with with the governance around what it is that we're doing and the risks that we encounter as we transform. And then as we look at AI technology, I try, while you may look at AI and ML for very specific narrow use cases, in which case maybe collaboration isn't such a big deal. But if you really want to get those transformational results, you're going to want to look more end to end. And there are very few processes in an enterprise that really don't straddle across multiple stakeholders within an organization and multiple functional areas. So I like to have a lot of organizational buy-in as we embark on a transformation effort, whether it's AI or ML enabled or whether it's something else. I hope that answered the question.
Mm. Those were great comments, Andy. Thank you so much. I don't think we have time for any more questions live, but again, we have captured all of them in the chat. Thank you all so much for being with us. Thank you, Andy, again for this fascinating discussion. More to come. Please watch this space for additional webinars from RGP. We hope to see you at our next one. Take care, everyone.
Thanks, everybody. Appreciate it.